Hey everyone, welcome to Alpha Insights. I'm Cassidy, and we've got a crypto heavy wrap for the long weekend.
And I'm Gareth. Quick housekeeping. US stock markets are closed today. The last trading day was Friday, January 30, and markets reopen on Monday, February 2nd. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
All right, let's dive in. Over the weekend, Bitcoin plunged toward $81,000. Thin weekend liquidity plus geopolitical headlines around Iran really amplified the sell-off.
Right. Weekend order books are shallow, so even modest flows or scary headlines can move price a lot more than during the week. Traders told reporters that the combination of geopolitical risk, political headlines in the US, and crypto-specific uncertainty made the market particularly twitchy.
Translation: if you're trading size or using leverage over the weekend, expect wider swings and more slippage. Execution risk goes up until liquidity returns on Monday.
And it wasn't just price. Regulators kept busy. The US announced sanctions targeting exchanges tied to Iran. This is notable because it focuses on service providers suspected of facilitating sanctioned transactions, not only on individual wallets or companies.
Which puts compliance and counterparty risk front and center. If you keep assets on exchanges, now's the time to review where you hold funds, think about custody choices, and consider spreading exposure rather than leaving everything on a single platform.
Exactly. Some listeners will hear sanctions and immediately panic, but the practical steps are straightforward. Use reputable custody, diversify where you hold assets, and be cautious with smaller exchanges that have unclear compliance track records.
On the constructive side, there are structural moves that could ease weekend liquidity problems over time. Proposals from big U.S. exchanges to enable 24/7 trading of tokenized stocks could align equity and token markets and smooth gaps.
That could be a game changer for weekend depth, but adoption and the actual implementation timeline matter. Even a good idea takes time to move the needle, so don't expect instant relief next weekend.
Meanwhile, there were some notable on-chain and industry numbers. Solana saw a huge spike in active addresses, up 115%, driven by new AI tools and a wave of meme coin launches. And Tether reported a blockbuster year, $10 billion in net profit for 2025, excess reserves of $6.3 billion, and over $50 billion added to USDT supply.
Those are signs of ongoing capital and activity in the space, but they're not universal positives. Bitcoin mining profits hit a 14-month low after winter storms disrupted operations. So you've got pockets of strength alongside real operational stress.
Good point. That divergence matters. Protocols and service providers are not all healthy in the same way. When you hear headlines about big stablecoin profits or explosive activity on one chain, remember, miners and infrastructure can still be under pressure.
Looking ahead, there are a few clear catalysts to watch when markets wake up Monday. First, the White House is hosting a stablecoin summit. Coinbase, banks, and trade groups will be there. Expect headlines about how stablecoins might be treated and whether reward structures change.
Second, watch for any follow-through on the sanctions story. Additional enforcement or exchange responses could change regional liquidity and the counterparty calculus. Third, keep an eye on mining metrics, hash rate, miner selling, and whether winter outage effects persist.
And fourth, monitor on-chain demand signals like active addresses and merchant adoption. One interesting stat from recent charts, about 4 in 10 merchants now accept Bitcoin in some form. That's a reminder real-world adoption still influences longer-term narratives.
If you're wondering whether the dip is a buying opportunity, it comes back to your horizon. If you're a long-term holder, volatility can be a chance to add. If you're trading short-term, tighten your execution plan, manage leverage, and expect bigger swings on thin liquidity.
I'll add one practical piece. Have a custody plan. If you want exposure but avoid exchange counterparty risk, custody alternatives exist. Self-custody with good key management or regulated custodians. Each comes with trade-offs for convenience and security.
Totally. Okay, let's wrap this up. Gareth?
Bottom line, short-term sentiment is fragile. Bitcoin slid sharply over the weekend because of thin liquidity and geopolitical headlines. At the same time, regulatory moves like the sanctions increase compliance risk, while structural developments, tokenized equities, and strong stablecoin results could improve liquidity longer term.
So, key takeaways. Tighten execution on weekends, review where you hold assets, watch Monday's stablecoin summit, and any sanctions follow-ups, and track on-chain and mining metrics for the real health picture.
Got questions? We'd love to hear from you. Head over to stockalpha.ai where you can ask us anything and we'll answer live. And while you're there, check out more market content.